the London Stock Exchange Group. I won't say LSEG. The London Stock Exchange Group. You'd be wondering what my transcript writes up for LSEG when I say that. It comes up with a lot of variations on a theme. Matt, it's a pleasure having you on the David Anderson Talking Market Data podcast. As I do with all of my podcasts, can I start you off by telling the audience that I'm going to put your LinkedIn on the description. I'll put LSEG's general URL, but if you send me a particular URL for DNA or the particular subset that you think is pertinent, I'll put that in the description. But as people are lazy and they probably won't read all that, can you give us a bit of an introduction to who Matt Eddy is, who LSEG is, who LSEG DNA is? We talked about this beforehand. Try and set the scene of where you personally and the section that you operate in and the products that you operate in, where they fit in the ever-growing entity that is now London Stock Exchange Group. Easy question to start with.
Well, that could actually take the entire hour up.
Well, exactly.
So, we'll see how we get on.
Yeah.
And I'm wearing corporate colours today.
Good.
You see that?
Yeah.
So my name, Matt Eddy, based in London, and I look after the real-time quant macroeconomic product. So what does that really mean? And we can split that into two sort of aspects. One is around the real-time business, kind of streaming market data, and then you've got sort of the quantitative analytical and macroeconomic data sets, more point in time, models, and those sorts of world. So if we're just talking more predominantly, I guess today, more on the real-time side.
Yeah.
My portfolio of products is the data feeds, so what was electron feeds, kind of streaming data, the tick history, the managed services, so RMDS or electron as a service, RTDS or TREP or RMDS and Triarch, and even older than that, the APIs and real-time optimized DAX. So all of the stuff that you build all of that kind of real-time world around, all that sits within my world. Now, what that means from a product perspective, it really is running a business, it's defining the product strategy, getting the investment, listening to customers, working with our sales and account teams to make sure they understand what the roadmap looks like, what the strategy is, and they can go and articulate that to the clients and to opportunities. So that sits within data and feeds.
Yeah.
And my manager, Stuart Brown, runs data and feeds. It's got PRS, it's got news and other aspects, and all the kind of the enterprise capabilities.
Yeah.
And then you've got the analytics side, and then you've got workflows and workspace and sort of the trading aspects, all within the data and analytics DNA umbrella.
But you're not the factory, you're not literally building them and coding them. You're designing or communicating customer requirements to the design teams. And then when the design teams build something and give it to you, your job is then to explain that and position it to your sales force, who ultimately communicate perhaps with your help. Is that?
Yeah, that's pretty much it. So we're product management. We have an engineering function. So the engineering function are the ones that go and sit at the keyboard and put the code together. We'll give them business requirements. They'll come back. We'll commercialize it and put it out to market. But one thing with the real-time space particularly is it bleeds between sort of a customer-facing product and a lot of what we do behind the curtains in terms of collecting, routing, managing all of the data on our aggregated network, or what was the Electron network. So it sort of bleeds between the two a little bit more in my world, I guess.
I mean, I've got to resist the temptation, because I want to go back and talk about Triarch, the Trading Room Information Architecture. See, I even remember what it stood for, and all those olden days. But frankly, the youth of today, the younger, don't care about that. We're where we're at. But in your world that you've just articulated and described, has that changed at all since Refinitiv got pulled into the wider London Stock Exchange Group, and where you were sitting before as part of a market data aggregator, you're now still that, but also linked with an exchange? Has anything changed, or is the exchange stuff really separate?
By necessity, it is separate. So the LSE business, the market data, the venue, and the LSEG, the group piece, are sat isolated and don't talk to each other. Regulatory reasons and everything else, right? So
Got it. No, that's useful to know. Let's segue into, and again, I think you've got a pretty broad swathe of products. But if I can be a little bit myopic, only because we've only got so much time, and because it's my bit that I was quite interested in days of old when I used to work in Reuters, market data systems, sometimes called market data distribution systems. There's sort of two notes. I'll tell you a little story. I remember when we created
You're not going to
RMDS.
use my entire hour up with an anecdote, are you?
I've got to do it. I'll do it quickly. But I remember there was a period in Reuters when they had the thought police said, we've got to call products by simple names. Reuters followed by a name that it is. So what should we call the new market data system? Let's call it the Reuters market data system. I think that's because certain French subsidiaries were calling things Cobra with a K and coming up with it. Yeah. Anyway, sorry. That, I remember RMDS, and now you've got RTDS. But modern, not old stuff that David remembers. What is a modern market data system? What is your RTDS, which is your modern market data system? But how generically have market data systems evolved since when I first started out in the mid 80s?
So, and maybe taking a quick step back from that. So I actually started my career at Reuters in the 90s, and amongst other things was then supporting Triarch. Sort of fell in love with that technology and wanted to specialize in that a little bit as well. And then went from there and moved to Chicago and left and kind of worked through various banks in the US and then across in Singapore. But always, even if I was looking after other technology, there was still Triarch or RMDS and TREP. It was sort of, I've either been installing it or supporting it and now running the product for it. So it's, sort of near and dear to my heart. So in terms, probably there's two questions you're asking there. One is, what is the platform? Why is it important? And then how does it maintain its importance and what's it being used for? I think if you look back, I don't know, probably 20 years ago, really the goals it was trying to solve for was being able to deliver a lot of data in cost effectively. And you look at
multiple data feeds from lots of different sources.
Yeah, exactly. Aggregating those, but then trying to do that cost effectively and efficiently. You look back at sort of telecoms costs and the stability and the bandwidth of lines, it was a lot more expensive back in, sort of 15, 20 years ago than it is today. So it was bringing the data in once and then being able to distribute it out and manage it and give it into different workloads and different desks and different offices and different geographies. And that's where it's been working and being really successful. And not just the products we've got, other competitors are doing the same, right? But being able to bring the data in, use it effectively and efficiently, manage it, control it, entitle it, cost control, and then being able to pass it out and deliver it to use cases, whether it's low latency, eyeball users, end of day, recording it, data lakes, whatever it's going to be. That functionality has not gone away, or that need hasn't gone away. And some of that is due to the fact that it's been doing an absolutely fantastic job in situ doing that in its various guises, and technology enablers have kind of allowed us to move things around the edge. But the core capabilities is making efficient use of data. And that problem hasn't gone away. That use case hasn't gone away. What's probably changed is technology's got more advanced. Telecommunications, network comms has probably got a little bit cheaper, and you can buy more bandwidth for a lot less. And some of the use cases are probably more advanced as well. So where it might have been end of month settlement, end of week settlement, end of day, it's like near real time risk calculations. There's the industry is evolving, and it continues to evolve. So it's how do we manage to stay on top of that? The other angle that probably to think about as well is apathy to change and inertia. I've worked at several banks, and all of them have core capabilities or an application that runs in the very center of that entire trade floor. If you turn that application off, then the bank stops running. And where the source code is for that, no one really knows. And no one really wants to touch the box, and no one wants to turn it off on a power down, because everyone's frightened of what it might do when it comes up, if it comes up. So there is an element of that. So there is, a backwards compatibility aspect we have to maintain. And, that's, you can call it legacy. I call it backwards compatibility. We're beholden to the use cases our clients have. we can move them along on a journey to try and make them more efficient and give them better APIs and different ways of integrating and using our data and our capabilities. But we still have to make sure we've got that backwards compatibility. So I guess that's kind of our ethos. And then in terms of where we look going forward, there's a bunch of factors at play there. One is, what technology enablers have we got? What's the industry expecting to use? You know, we haven't, well, cloud is obviously prevalent and a game changer, and we talked about it pretty much ad nauseum, and I think we will for the next 10 years as well. And then with the new breed of engineers coming on board, what do they expect as well? You know, the tried and true and, you know, somewhat crusty old market data guys, myself included, have a particular way of working and understanding that. A newer generation coming through might not want to see those same kind of capabilities. That's the stuff we need to engineer for.
I mean, a flippant question that popped into my head. If you or somebody like you just sat down with a blank sheet of paper and built a brand new system from scratch, would it be better than the legacy development system that's built over years and years and years? I mean, I don't know if it's actually, to your point earlier on, you just can't rip out a system. That's the risk factor, isn't it?
It is, yeah. And I mean, there's a reason that RTDS is in 97 of the top 100 investment banks. You know, it does a fantastic job. It's got a pedigree, it's got a heritage, but then we don't really want to sit on our laurels either, right? So if we were going to design it from scratch, and we have sat down as engineering teams and the product and sort of had those whiteboard sessions, what would change? Would it change fundamentally? It's still a need to be able to produce, or to have producers and consumers of data, and being able to offer management of that. I mean, the basic tenets are the same. The underlying technology and how you might either market it or commercialize it might change. And maybe some of the underlying technology capabilities might change, but generally the concepts are still there. And that's shown by all of the competitors that are trying to displace RTDS. No one's coming up with a radically new offering, and they want to make it as backwards compatible as possible, just because customers aren't going to do it, rip this out from under the floorboards.
But I'm trying to think how to ask this question. I'll ask it directly, and not in any accusatory way. I mean, you've got, not you personally, but you're managing something that has got enormous market power. That because so many of those 97 banks or whatever, and I remember, it's all thanks to me. It's all thanks to me and my group in the 90s. But seriously, there was a lot of competition for market data systems, and over time, because we had Triarch was such a very good product, we won an awful lot of business. We lost a few to this nasty company called TIBCO, and then we went and bought them and merged it all into RMDS. So you know, and that's good. You know, there is this established player, but is that entirely healthy if there's no room for competition, or where do you see competition can play a part?
I'd maybe disagree that there isn't any room. There's absolutely room. It's an open, level playing field. Like you say, there's advantages to being incumbent in a customer site, but then there's advantages to try and displace. Right? Everyone's got their own sort of tactics that they're going to use from a vendor perspective. The tactics we've got are, we need to make that product indispensable, right? And that requires investment. To your point, I mean, it is a giant in the industry, and you know, we don't take that responsibility lightly. Equally so, all of the software that we produce and we sell to clients, we use internally. So we're routing hundreds of millions of instruments around our network using RTDS and all those capabilities. So we are probably the largest eater of that dog food out of all of the clients, and all of our managed services runs on it as well. So yeah, it's super strategic for us. It's one of our crown jewels, and we don't take it lightly. If we don't, from a customer perspective, obviously they can go out and look around, but there is a lot of risk, and there's a lot of effort involved in displacing it, right? As with anything, it's like if you wanted to go and rip out Exchange and put Google Mail in, you can do it.
I know, theoretically, yeah. No, I I hear you. I mean, another thing that I remember, and I must admit, I haven't been following it as much of late. One of the beauties of the APIs and the well-documented APIs, that was one of the things I remember, that Reuters back in those days, APIs were really well documented and supported. There was a whole third-party network of application providers. There was an ecosystem, a cottage industry, whatever you want to call it, of people who could come along and add value. I mean, they could plug in as a producer. So the idea was the API allowed somebody to come in and publish something into the system, and then equally there were APIs to allow stuff to be extracted, consumed. In the good old days, it was source sync. I remember that sources were things coming in and syncs were consumers. But the APIs were written in such a way and supported to encourage lots of other players. Is that still the case? I mean, how does that work?
No, absolutely. Yeah, we've got an incredibly vibrant application community. So the developer portal, I think, has about 30,000, probably even more than that now, unique visitors each month. And those are partners, consumers, API geeks that need to get help. And they want to log in and either post a question or look through materials or follow tutorials. So, that's incredibly important to us. And the partner community that we've got as well is, so all the APIs are open source. You can download them. You can create what you want out of them. And like you say, whether that is a consumer or a producer of data.
You came back, Matt. Did you see you disappeared briefly?
Yeah, for a second.
Okay, well, I'll edit all that out, or maybe I'll leave it in just for a bit of fun so people can see this is real. So you were in full flow. Carry on, or start again.
So the APIs are all open source, and partners, clients, competitors can download those APIs and they can write whatever code they want against them. And indeed, from an RTDS perspective, you can buy RTDS without having an LSEG data feed. You can have it without having entitlements from DAX. You can buy DAX on its own. It's all very much separate parts, but they all work beautifully together. So, and that's what a lot of our partners and a lot of our clients like. It is very much a one-stop shop that's got proven track record. But yeah, all of our partners, we make sure they're aware of what our roadmap is and what they need to make themselves successful as well.
I think a segue that I would like to go on to is the sort of distribution side of things. Because you mentioned cloud before. I mean, one of the things that's changed, there's a couple of things that have changed over the last 10, 15 years, maybe a bit longer. Before we had the cloud, there was this concept of direct connectivity with exchanges. So a lot of consumers of data would take a data feed from Thomson Reuters and aggregators, a FactSet, a Bloomberg, or whatever. That's where they got their exchange data through. And then more sophisticated, high performance ones, maybe seeking more lower latency or whatever, would take a feed direct from an exchange. And sometimes they'd use dedicated systems to be able to do that, I think, in the early stages. But I think you guys, got in on that game and provided a direct connectivity architecture. So that's something I'd like you to do. And I'm curious if that's still in play. And then subsequent, and maybe connected, cloud came along. So those are two things. Talk me through those two things. I don't know if there's a logical sequence to that.
Well, there is, but I've got a short attention span, so remind me if
I will do.
If I lose the track. Certainly from a direct feed, ECN connectivity, that has been around. I mean, and the specialist players in the industry can do that in the microsecond range, and that was the Main Street acquisition for us, really kind of brought us into that. We had a direct feed offering, probably wasn't as performant as we would like and as some of our competitors were. And it being more used as an alternative source of a compliance feed. We've looked at what we need to do around that and make it more competitive, and that was the Main Street acquisition to move us right down into that low single double-digit microsecond range. That can be consumed directly, that can be consumed and published into RTDS or other platforms. Really depends on what the use case is. Some customers want the lowest latency they can possibly get, but those ones are very much the niche customers. They might actually be the ones that are hard coding, and writing their own silicon. That is niche beyond niche for us. What we're looking at doing is offering a highly competitive low latency feed that can then either be consumed as a library and sort of basically a crossover cable into an exchange location, or one step removed from that and kind of semi-normalized with a light data model that's consistent with RICs and with the wider LSEG data model, or being brought in and then it can be cascaded into RTDS. You can then run qualities of service on it to degrade the sort of the update rates and make it more manageable for other consumers. So it really is, it's a complementary service that sits within our portfolio. But it's something our customers were asking us for.
And you've said two words in there which I like to pick up on, and there's a distribution angle and there's a normalization angle. So the distribution is about getting data in and be able to get it distributed efficiently, effectively across a network.
Yeah.
That's one thing. And in the ultra low latency or low latency, you want to do it very, very quickly, but reliably. You don't want to miss anything. That's also a critical thing in these markets. The normalization, and you use the word light normalization, we'll come back to that. Normalization is all of that data is garbled up in different data models, in different structures and whatever. And the poor consumer, the poor recipient of all that data would have to do a lot of work to understand all the different elements there. So one of the fundamental building blocks of Triarch, RMDS, TREP and all is this normalization. Help me, normalization, light normalization, not any normalization? I mean, are all three flavors available?
Well, it kind of goes back, I guess, to the direct feed piece. If you want to speak the exchange language, then you absolutely can. But you're going to have to learn that language, and you're going to have to keep up with that language as it changes, whether that's adding precision, MIFID fields, greater granularity, fractions, decimals, whatever it is. All those changes happen on a regular basis. You've constantly got to adapt that language. If you want to do that, then you can. If you want some light normalization, then that's where our direct feed.
What is light? Light. What does that mean?
So we still want to move it into the kind of the RIC symbology. But what we don't want to do is, well, if we have a look at what our consolidated feed is, that many will know as Electron, LSEG real time, that takes effectively 575 different venues or different languages. And that could be itch and mitch and fix and whole range. And then puts that into a standard data model, into a standard template. So you always know where trade volume is going to be, last price, bid and ask. We do all of that language translation, and then we put that onto the same distribution bus, to your point earlier, and make that available through one pipe. So you have a human readable symbology, and then you have a consistent data model. What we also do, then do a whole load of value adds. So we'll calculate fields and we'll inject those back into that RIC. So 52-week high, open, high, low, close, they might not be coming from the venue. We'll run analytics on those, inject it back into the instrument and make that available. Now, what a lot of customers and partners don't realize, because we've been doing it for decades, is that is actually LSEG data we're putting into that symbol or that ticker to complement the stuff that we're taking from the exchange. Now, a light data model is where we might look at the exchange might only send 20 fields. We might send 40 or 50 if we're calculating and adding value add stuff. We won't do that on our direct feed because we want to keep that model as lean as we can. So we'll only send the fields that are absolutely necessary and typically the ones that are coming straight from the venue. So it's a consistent data model, but it doesn't have all of the value add stuff wrapped in.
Yeah, from memory, was that market feed? I remember that. Was that the data model? I remember, which described all the records and the field types, and they were all numbered. So again, I digress.
So that's all part and parcel of it. We're moving beyond that just because the scale of data is, ASCII format, field value pairs. It doesn't work for us anymore. So we're actually having to look at what we're doing around market feed and deprecating some of those capabilities. It's so
times are changing. Yeah, times are changing. I mean, another, again, because I listen, you listen, you're out there in the market. And another phrase that I've heard, lock-in. There's a lock-in. And that is posed as a criticism. Is it posed as a criticism or a critique or whatever? I don't know. But the phrase is used. And again, when you talk about these data models, in a sense, if you have written everything to APIs and data models and symbology, to some degree, you're locked in. Now, I'm not saying if that's a good or bad thing. I mean, what are your
I've been on
thoughts?
both sides of the fence, and I was a large US investment bank where we were concerned about lock-in, and we're looking at abstraction layers and other ways to remove that so-called threat. And to be honest, you remove the lock-in from one vendor to another. So I don't
Frying pan into the fire.
Well, yeah, I mean, you've still got to have a relationship and trust someone. And I get that you might want to arbitrate and be able to have some flexibility, but the overhead in terms of complexity and cost, I think that isn't worth the pain that you take on. You're having to build your own cottage industry to kind of stay on top of that. And I know some customers do, and we're absolutely fine with how they do it, but the complexity it adds, I haven't seen any clients actually take advantage of that. The agnostic or the abstraction layers. And so I kind of disagree with the term of vendor lock-in. I mean, if it was to the point where you want to get out and you can't, then I get that. But for something that's so mission critical, I don't think you want to tinker with it and try and, build layers of complexity and technology around it. I think it jeopardizes the product and its performance. And that's kind of been my view, both on the customer side and obviously even more so on the vendor side. So.
Got it. So look, I think we did start to segue into the sort of the new technology. We talked about distribution normalization, but on the distribution part of that, cloud, it is I suppose you had colo first, co-locations and proximity hostings. That was the sort of precursor. And then we've had cloud, for 10 years now? I'm trying to lose track of when we first started talking. We've been talking about it for a long time.
Yep.
And there's been a variety of observations made. I mean, exchange data in the cloud is often sort of bandied around. But I remember somebody saying to me, there's never really exchange data in the cloud until you get matching engines in the cloud. That's when you have true exchange data in the cloud. That's one thought. And another one, you can't get multicast to work in cloud. So I'm going to focus on the multicast one, because I know you guys have been thinking about this and working on this a lot. First, why was multicast important in the first place? Why did we want or need multicast in the first place? Okay. Then why have we had this issue that apparently, supposedly, it can't be made to work in the cloud? And then the third point, which I think is good news, is I think you guys you haven't solved it, you've sidestepped it, is the way I would say it. But again, talk me through those three things. Why was multicast important? Because it was at the heart of RMDS, maybe slightly less so Triarch, but that's going back a bit. And then, cloud.
So I think there's probably two ways to look at this. And I think the way you were positioning that question was around multicast in terms of a market data distribution system using multicast.
Yeah.
So definitely one element there. And then the other one is around what you mentioned there, sort of exchanges creating data and then publishing that exhaust out from a matching engine and being able to be consumed by market data aggregators. So both of those are going to rely on high performance, low jitter, deterministic multicast that you can support and you can troubleshoot. And at the moment, none of the cloud providers have got the technology that would enable that. So you can run multicast and you can run it with TCP overlays, and there's other technologies out there that sort of simulate it, but driving that at scale in a deterministic manner that matches physical hardware in a data center is not quite there yet. So
because what we're doing now is distribution and whatever, but the jitter doesn't matter as much. It does matter because we've had a couple of hiccups. But if I miss one word of yours, I can work out what you said.
Yep.
But that in a market data distribution system is no good.
No, that throws the entire book out, and you have to either reconnect or resubscribe or backfill, and it's a painful exercise. The appetite for any kind of loss is absolutely zero. So that, and then the deterministic performance. So even at the highest volumes, you're still getting the same performance at that point as you are off market. So from that perspective, on the data creation side, from an exchange, that's still a problem that we're trying to work through. And not just us. That we've seen the announcements with CME and Google and NASDAQ and AWS, etc., and Microsoft and LSE. That's a common industry challenge, but we face the same challenge when we look at the market data distribution system as well. So with RTDS traditionally running with a multicast backbone, so all of the producers of data have the ability to send to many different consumers of data, so the sources and the sinks, as you mentioned earlier. That across multicast just doesn't give the performance that we like. And we've been benchmarking with multiple cloud providers, multiple technologies, multiple ways to try and get around that, and we just don't see that performance yet. And we don't want to put our seal of approval on it. So from a sort of a supportability perspective, we're still a few iterations away from that. So what we've done with...
So the wrong way of thinking about it was to say, how can we get multicast to work in the cloud? The right way was to say, well, why did you want... Why multicast is just a thing. The actual benefit you were seeking was X, Y, Z, and maybe you can get that benefit through a different mechanism.
Definitely in the short term, and probably at a customer by customer basis. And that's what we're doing with what the real-time connector is, which is a component within the RTDS suite. That is all unicast. It's all TCP from where it caches the data and distributes it and fans it out to clients. That's all kind of a TCP mesh. That replicates most of what multicast does. There's a couple of things it does better and a couple of things it might not do quite as well, depending on what your angle is. But trying to solve for multicast is still probably the way the industry is going to go on how that can happen at scale in the cloud, because the amount of data being created by all of these different exchanges, the TCP way of doing that is just not scalable from a technology or commercial perspective. So multicast, unless there's something new that we can leapfrog to, multicast in the cloud at a layer 2 pure networking capability, that's where the industry's, that's the next big thing to crack. I don't know what other industries use multicast as extensively as us, really. I could imagine, but I'd be guessing. So.
No, and the reason I asked the question was just, I suppose if there were other people interested in it, maybe there'd be more effort placed on it. Again, your sense when you talk to the cloud providers, how important is it for them? Because, we think we're really important. We think the be-all and end-all of the financial markets and else. But if you're a Microsoft or a AWS or a Google, we're a tiny little bit of their world.
Financial services, once you start looking at all of the different venues, and if you could offer this and then you could build a utility service out of it that collects and distributes that across a cloud provider's network, it's going to be quite a game changer. And if you could sort of almost corner the market in that. So there is a fair bit of work going on across the board to try and be the first one out of the blocks to be able to solve that at scale.
Let's segue into a couple of things, the wider topics. We've talked very focused on market data systems, the world that you and you're still in, I came from, very interested in that. But what are you seeing where you sit, the wider market data industry, what exchanges are up to, what data vendors are up to, the role of cloud, high performance computing? I'm really pleased that we had AMD now becoming a member of FISD and engaging with the market data community, talking about chips and chiplets. And then AI. You can't avoid AI everywhere. What are your, again, you've got about 5-10 minutes to talk on those. So
I'm maybe not even going to talk about any of those, at least not directly. I think what they are doing, they're all enabling new ways of working. But equally so, what we're seeing across the industry, there's probably a couple of interesting things that have just crept up fairly recently, I guess. Certainly on me anyway, probably not on others. I know there's others been talking about them for a while. But one is sort of the rise of the retail investor, and the
Yeah.
interest in American markets in Asia is something we're really starting to take notice of now. Um, Both from sort of a capacity management perspective in terms of the data that that's generating and the change in where those data sources are. Obviously, a lot of it currently is created and the trading happens in the US, but Asia wants to be able to trade on that 24 hours a day.
Is this the 24/5 discussion, isn't it? The
Well, it's kind of
24/5.
leading into that, yeah. So alternative trading systems was sort of the first thing. So Blue Ocean, as an example, of
Yeah.
spun up, and they're giving that ability for Asia to sort of trade on those markets to a certain extent. That's one big thing, but the kind of the investment and the wealth that we're seeing being driven out of Asia, everyone's got access to wealth. Everyone wants to have their own portfolio of stocks. And so how is the industry adapting to that? So 24/5 or 24/7 trading is definitely one thing, and that's going to be really transformational across the industry. You know, when does start of day checks finish? When does embargo periods begin? When is an end of day settlement price? You know, it's like lots of different things like that you have to think about. When can we make changes to the system? So we're looking at that. But then the other angle is just around retail investors, casual traders, fractional shares, and all of the data volumes and all of the change in the sort of the trading patterns throughout the day really are, that to me is one of the interesting things I'm trying to understand and get to the bottom of right now. We had an example in China on Shenzhen. They had a stimulus package there, and there's a lot of excitement, a lot of interest. And because we're also then offering fractional shares of traditionally, much larger stocks, I think the order book depth hit about 200,000 when, typically we maybe sort of 10,000 would be a maximum. So how do we deal with that? What customers need to see that depth of book? And increasingly, the sophistication of retail portals are asking for more and more both full tick data and deeper books, because the trading patterns of these casual traders is getting more complex as well. So there's some interesting dynamics at play there that are going to fundamentally change how we manage these systems and how we operate, on a day-to-day basis.
Does that, because I would have historically said that retail brokers from a technology engineering perspective were relatively unsophisticated because the downstream users were relatively technically unsophisticated. But what you're saying is you think it's all building up momentum, and the customers, the end users, are more sophisticated, and these retail, is this people like Robin Hood and Toro, or those are the sort of players, aren't they? It's not, because it's not the area I'm as conscious. We've Goldman Sachs, JP Morgan, all the Fidelity. That's been the sort of focus. But interesting that you're seeing these other players starting to have appetite.
Well, and then equally so, then the big traditional sort of names and brands that you just mentioned then need to start thinking about how they're going to respond to this as well on their wealth platforms. So the volumes we're seeing, and obviously with the one-man market volatility creator in the White House at the moment, seeing record peaks constantly on our backbone, and not just at US Market Open. That can be a tweet on any different platform, or news breaking. So it's definitely the changing way of the market data world in terms of the volumes we're seeing, where it's consumed, when it's consumed, and how we need to manage that on a go-forward basis. So, AI is going to play into that, because you can put straight trading strategies in and have that work when you're asleep. The chips and chiplets and the kind of the ever-increasing capabilities drive volume up. It's no coincidence that market data volumes go up at about the same rate as Moore's law and kind of the doubling of compute. It's all intertwined, and so we need to be aware of that. We need to think about where we're going to be in 10 years' time. And actually, that's one of the big programs.
Well, you're going to be. I suspect I'm not going to be. Speak for yourself. We'll see if I'm still around in 10 years, literally, or in the market data industry. Oh, I'm touching wood as I say that.
Oh, that's not a nice way to finish, David.
No. Nobody wants to see the back of David Anderson. Well, not many people. Look, that is a segue into our final point as well. Talent. It's come up time and time again. It's coming up more in general industry conversations. Specifically, and I think it's pertinent, I've heard people say those that have the incumbent system that was Triarch, that became RMDS, TREP, and now RTDS, a lot of the guts of that, the core of that, there were a small group of people of my sort of age in their mid-60s who really understood that. And people like me as deciding to go and retire and enjoy our lives and not have to have conversations about multicast anymore, although I find it fascinating. So does that manifest itself in your world, and what is being done, what can be done?
Yeah, and you mentioned FISD earlier. I mean, it's been a topic on those panels and other trade shows as well, right, around the future of the industry and where does it sit. And I look back at when I started in the 90s in Reuters field service. There was a good grounding in an expectation. You learned the basics, and you kind of learned the hard way to move up through the sort of the ranks. And I don't know whether that happens today. Well, I know it doesn't happen. It's a different breed. It's a different set of capabilities. People are being taught different things at school as well and at universities.
Well, a lot of the field engineers came from the RAF or the sort of REME or mechanical engineering or electrical engineering.
It's someone that's got kind of that full stack set of capabilities, network, server, operating system application, and then you sort of learn through hard knocks how to kind of put all that together. So it's a little bit of a different profile for that. So what we're looking at internally, and others are as well, I guess, is how do we not future proof, maybe future proof, but how do we ensure that the next generation of talent, A, is aware of what this is, B, wants to work on it and has the skills for it, but then how do we make it as easy for them as possible to take advantage of all of this? So it might not be, back in the day going in with a floppy disk and trying to rebuild an operating system. That's gone. But what are the new capabilities that they want? How can we use orchestration? A lot of the kind of the cloud capabilities are equally applicable on-premise as off-premise.
So you were talking about orchestration and the new breed that you're bringing in and how you were incorporating them. I mean, I'd add into that, where do you find them?
So we've got a really active grad program in LSEG, and we have early careers as well. And some of the talent that's coming through there is kind of frightening,
I mean, they're almost as clever as you and I. Almost.
Let's not go that far. But no, the CVs that they've got as young 20-year-olds is better than mine probably is now in terms of what they've done and accomplished and the levels of maturity they show. But so that's one thing, is bringing the talent in and getting them excited about the industry. But then it's giving them the tooling to make this possible, right? They might not want to sit there and go through command line structures, and they might think there's a better way to do this. Templated designs, automated deployments. So we're looking at how we can build our products to fit in with that world. And going back to what we talked about right at the beginning of all of this was then that kind of incumbent and legacy world that we've got, where clients don't want us to change. They're like, this system, we love it. It's completely rock solid. We don't want you to change anything on it. It's like, okay, well, so we need to cater for those clients, but know that those clients are going to need to hire a younger generation of staff, the next talent pool to come in. But then also new clients of ours want a completely different experience to the one that, those big incumbents have as well. So it's not friction or attention. It's almost two different problems we're trying to solve for.
I mean, exciting times ahead. I think, there's a lot more to come. I've done 41 years nearly in this industry. I definitely won't be around for 41 more, but I want to stick around and watch things unfold for a few more years. And I think it is exciting times. It's a great industry to be part of. I mean, we occasionally use the word, it's a bit silly. How do we convey that this is a sexy industry? I think what we mean is when you're in it, I enjoy it. I love having these chats. I
Yep.
find it really interesting.
I,
Um,
I'm very fortunate to be in the position I am. The software, the services, the people I work with. I'm massively passionate about it. I want it to be successful. I want it to be the best it possibly can, because you've seen it kind of evolve and you see where it possibly could go as well. Like you say, the industry never sits still. There's constantly new technology enablers, we talked just about sort of the way the markets are adapted, new ways to be able to solve for that. There's a constant set of challenges put in front of you that require a lot of brain power to think about and move forward with. So, yeah, there's never a dull moment. And how do we articulate that and make sure that the next breed are aware? So,
I think it's our job. We've got to get out there. There's more to come on how to communicate that to a wider audience. Of as you say, the new breed. I don't know if it's ages to say youngsters. They probably are mainly youngsters. I don't think we're pulling an awful lot of people mid-career from other industries, or are we as well? I don't know. That's
there is an element of that. I think what we've been looking at actually more is aptitude, and like I said, sort of that full stack is being able to be flexible. You're not going to learn all of the intricacies of all of these systems over a course of 6 months, but if you've got the aptitude and also bringing in a little bit of fresh blood, new ways of looking at things and challenging established ways of doing stuff and technology standards, it's actually quite refreshing. So, there's a lot of benefits to it, so long as, we don't drop the ball in the meantime by sort of trying to position too far for the future.
Yeah. Well, let's hope my broadband provider is putting as much effort into the future. I hope the audience don't notice, but we've had a few hiccups on this call, but it all makes podcasting that little bit more exciting. So, Matt, thank you for bearing with those hiccups along the way. I hope my editing skills solve it for you and for the listeners and watchers.
I'm sure it'll be seamless. I won't even know.
That's the theory. Look, it's been a pleasure. So I will bid you farewell now and say thank you to you. It's been a pleasure having you on here. Don't hang up. I will stop the recording.
Been a pleasure, David, as ever. Thank you, sir.